Access Bank, one of Nigeria's leading financial institutions, today held its 29th annual general meeting in Lagos. It was an opportunity for the management of the bank to engage shareholders and stakeholders on the 2017 financials, with insight into the outlook for 2018 and beyond. The auditors in their report gave Access Bank a clean bill of health on its financials.
We are satisfied that the bank has complied with the provision of Central Bank of Nigeria Circular BSG-1/2004 dated 18 February 2004 on disclosure of insider-related credits in the financial statement of the bank. We hereby confirm that an aggregate amount of 1,650,860,935 naira, that's December 2016, and 2,693,131,022 naira was outstanding as at December 2017.
Shareholders gave their remarks on the performance of the bank.
I congratulate the bank for the performance this year, and also for all you have done for the empowerment of women in the area of savings and in the areas of growing their businesses.
And I also want to specially congratulate the management of Access Bank. It's been quite very turbulent in the economy in the year 2016-2017. And coming out with this kind of result shows that there is still hope in spite of the turbulence that we have passed through.
The Group Managing Director of Access Bank, Mr. Herbert Wigwe, responded to the remarks of shareholders.
If you go back to the last 3 corporate strategic plans, there is not one in which we failed. When we came in 2002, of course with your support, this balance sheet we are talking about was 10 billion naira. Today we are talking about a balance sheet that is 4.3 trillion naira. We had 12 branches. We are now almost 400 branches. In 2013, our customer base was less than 6 million customers. Today, we are more than 9 million customers. If you look across all indices, from a risk standpoint, which is the most important thing to you, the fact that you can have a going concern, not an institution that is here for 1 year, for 3 years, for 5 years, or for 10 years, but by the grace of God that will outlive all of us. We have one of the strongest index as far as capital adequacy ratio is concerned. We have one of the strongest index as far as NPL ratios is concerned. We have one of the strongest index as far as cost of risk is concerned. Those are very strong things by which you measure an institution. And I think in line with the 5-year corporate strategic plan, those indices were met. However, we will also be one of the first to admit that from a profitability standpoint, which is perhaps what you were looking at, that the number did not get to where it was going to get to, and therefore make us one of the top 3 from a profitability standpoint. Now, things do happen, and the issue with the telecoms industry happened, and that affected us. If we didn't take the very aggressive provisioning that we took, I don't think that the comment would have come out. But as far as I'm concerned, look at your gross revenues and look at the top line and ask, where do you find the top 3 or top 4 banks in this country? You will definitely see us. So we're not far away from the 2013 to 2017 strategic plan. But like we've always said, we see our lives in tranches of 5 years. So we finished that 5-year corporate strategic plan, and so we had to start another one, which is going to see us become a much stronger institution and representing Africa's gateway to the world between 2018 and 2022. Now for NYSC, you see, the youth segment is important to us, and one of the places you get them is in the camp. Now, supporting NYSC is not about giving cash to NYSC. It is in trying to make the living conditions for those who come in after their universities to those camps to make sure that it is livable, if you get the point I'm trying to make. So we don't just give them cash. Now, the roads that lead to some of these centers are absolutely unbelievable. They are very bad. So we help them to make it. Now, but let me tell you, it serves more than that. It's a strategic arrangement for us to make sure we continue to sign on more and more and more of the corpers who will perhaps also have a lifetime banking arrangement with us in Access Bank. Now, you spoke about dividend. I wish I could have paid an additional 20 kobo dividend, but let me tell you what it is. We now have the introduction of IFRS 9. We don't want to see ourselves coming to the market to start issuing Tier 1 capital again. And so the idea, in line with our dividend policy, is to ensure that a couple of things happen. First of all, that our capital expenditure, all right, of the coming year under the plan can be carried by the bank. Number two, by the current year's profit rather. Number two, to ensure that our capital adequacy ratio is at least 20%. And then number three, to try and see if we can achieve what can be a 5% dividend yield. Now, if not for this impairment, perhaps we would have said, can we increase the amount of dividends that we would have paid? But what we've done is to straddle in ensuring this residual dividend policy to make sure that shareholders remain content, we meet their yield requirements, and also we meet the capital adequacy requirements, which is perhaps more important to each and every one of us here than anything else.
Some of the shareholders shared their views at the annual general meeting.
Access Bank have always been a performing bank. Every year we come to celebrate their good performance. Even a 2017 account which we consider today, if you look at all the indices in the major balance sheet and profit and loss account items, they all showed, they are very encouraging. They showed that yes, the bank is hardworking, the bank is committed, and they are, really doing well. You take, for example, the gross earnings, they grew it by 20.4% to close at 459 billion naira. This is by all, something, it is a huge amount of money, 459 billion naira. Then if you look at the total assets of the bank, it has now crossed the 4 trillion naira mark. It closed at 4.1 trillion naira. This is also very good for a bank. And also if you consider the shareholders fund, it grew to 515 billion naira. It grew to 515 billion naira. I think all these are figures that, the shareholders, you can see everybody is happy. Also, if you look at the profit, before tax, despite the fragility of the 2017, economic, recovery, the bank was still able to grow the profit before tax to an amount that is exceeding 80 billion naira. I think these are things that the shareholders consider. And again, not only that, the bank capped it with a total dividend payout of 65 kobo. They had earlier paid 25 kobo interim dividend, and they balance it now with 40 kobo, which were approved today. I think by all parameters, the bank had done well, and the shareholders, as you can see, everybody is happy because they are going home with our dividend.
That is a major takeaway of any investment. No matter how little I think they have tried for the year, they have a solid board, and looking ahead, they are going to do better. But I think it's good for now.
The 29 annual general meeting for me is an excellent one. We have good results, and the profit they make is good, and they are going to pay us the final dividend now. And I hope for the future they will pay more than what they pay us today.
Shareholders are very delighted. One, that Access Bank have been a bank that have been consistent over years in dividend payment, and also return on investment to shareholders. Also, we saw that there is always growth in their total assets. And so the hope is there for the shareholders. And the MD himself, the GMD, has already told us that, look, there are prospects for them to achieve far more better results than what they have gotten last year. So shareholders are very delighted, and we are hopeful for a better future.
With the payment of 40 kobo dividend, Access Bank has shown consistency in its value for shareholders, even as it is poised to drive innovation and strategic financial services in its laid out 2018 to 2022 strategy.